Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the Pink's CYDVF, and on Frankfurt's C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Rick Ackerman, editor of the newsletter Rick's Picks, his website, rickackerman.com. Welcome back to the show, Rick.
Always a pleasure, Jim. Thanks for inviting me on.
Does it appear to you that the markets somehow are being manipulated?
Absolutely. You know, I don't take any price movement in any stock on any given day at any moment as something that's other than 100% manipulated. And today, interesting example, you know, they decided, that's with a capital T, decided to hit the FANG stocks, and Amazon in particular was down, I think, as much as $38, $40 at one point. And yet the Dow was unruffled. And how that happens is beyond me. You can see that, taking back a few steps back, it's easy to recognize that it's just money rotating, and there's always kind of a buy-side bias. There's always a bullish bias. And so they got to be buying something. But today, the Dow remained buoyant while they really whacked these FANG stocks, in particular Amazon. And it raises the question, well, like, how do they know? How do they all wake up and all the chimpanzees who manage other people's hard-earned money, how are they all on the same page that morning to be, buying Dow stocks, selling the heck out of the FANG stocks? And it feels like that phenomenon in particle physics where things happen simultaneously on opposite ends of the universe, where one particle is having an observable effect on the other, and it occurs not at the speed of light, it occurs simultaneously. So all these guys woke up this morning somehow telepathically on the same page.
As an investor, what should you do? Is it time to be super cautious?
Well, I'm just, let's say, somewhat cautious. I get a little tired myself of hearing myself say, well, this could be an important top, or that could be. But, I tend to simplify things as much as I can. And in that regard, I watch Amazon, because Amazon to me is it's the most important stock traded on this planet. It really represents the climate of retail, consumer spending and all that in the largest, most consumer spending country in the world. So I watch Amazon really closely, and yesterday it came within a hair of a 2038 target that I put out a little bit earlier, what I call a hidden pivot resistance. So one other key stock that I've got to follow is Apple. I had a 226.26 target on it. It got maybe $3 above that. But and ordinarily I would look at that as significant and start looking at the next higher target. But just looking at the chart, visual inspection suggests that the overshoot was hardly anything at all. So we've got two key stocks there that yesterday made highs, and they've come down since at ostensibly important and logical hidden pivot targets. So I've got the yellow flag out right now. I'm not going to be standing on a rooftop saying sell everything, but I'm careful here.
Amazon and Apple now members of the $1 trillion club. Who's going to be next to touch that mark?
Maybe Facebook, Google. It's interesting though that no sooner does Amazon get to the $1 trillion threshold, then Bloomberg puts out a hit piece on it. And I tend to think of anything we read in the news that seems to be having an effect on stocks as a planted story. And we've never lived in a better era for planting stories with the quote-unquote financial press, because they are lazier than they've ever been, and they just proceed sort of on a monomaniacal path of saying just there are no real stories. It's like the weather story every day. You look outside and you can pretty much write the story in your head. So they never give us anything interesting or new, but the timing of the stories is interesting. So in Amazon's case, we've got the stock hitting that $1 trillion threshold, and Bloomberg is out there with one of those planted stories, planted by people who would like to be buying Amazon at lower prices. And it's giving us 10 reasons why Amazon has gotten ahead of itself in reaching that $1 trillion valuation. You know, they haven't perfected a revenue model for the food business, and they keep plowing back all of the profits to increase market share and this and that, and so little of it comes to the bottom line that Amazon doesn't really deserve to be a $1 trillion company, but it is.
Well, Amazon, unlike Facebook, actually produces things, ships things, moves things around.
Yeah, but strictly speaking, they don't move them around profitably enough. You know, Amazon just takes everything and they plow it back into more warehouses. And yes, eventually that leads to not just a dominant presence in global retail, but perhaps something approaching the holy grail of monopoly pricing power in global retail. So that's what they're kind of aiming at. And I always, if there's a story that I can put out there why Amazon might somehow fall to $100 a share, it would be something like in the next recession, when Amazon has this power to essentially put prices anywhere it chooses can put the squeeze on its own vendors and achieve absolute power over prices, that there's not going to be some riots in the streets and a demand for Apple to be regulated or Amazon to be regulated as a public utility because they control all these prices. So the next recession is not going to be a good time for Amazon to consolidate its power by jacking prices.
One thing Amazon's doing differently than everybody else, though, instead of just buying back their shares to pump them, as you said, they're investing in new warehouses, new products.
Right, and there's so few places you can put your money that most of these companies make the permissible but egregious mistake of putting it in their own shares, so that they wind up trading at multiples of 200 to 300 times earnings. So, but yeah, at least you could argue that Amazon sees actual growth in certain areas of its business.
We'll have more with Rick Ackerman right after the break.
Ackerman Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Ackerman's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at ackermanresources.com.
I'm Kelly Jennings, CEO of PowerBand Solutions. PowerBand is a cloud-based provider of auction, inventory, and finance solutions that make buying, selling, and financing vehicles more efficient. PowerBand Solutions trades on the TSX Venture Exchange symbol PBX and on the OTCQB symbol PWWPF and on Frankfurt symbol 1ZB. For more information, please visit us at powerbandsolutions.com.
Welcome back. We're speaking with Rick Ackerman. Rick, what's your position on mining stocks right now?
Boy, do I hate them. I got kind of seduced. I was out for a little while, just taking care of some medical issues, and I had a gold bug take over for me. And before you knew it, I got as legacies bullish recommendations on New Gold, symbol NGD, and on First Majestic, a silver producer with a lot of its properties down in Mexico, symbol AG. So I waited for a while to get into those stocks, and I thought we got in relatively well. You know, in the case of First Majestic, it had come down from, as recently as July, the stock was trading at $8.40, and I didn't even start buying till we got down around $6. So I thought we dodged the bullet, but we got in, and it seems to want to go lower. And with NGD, New Gold, it looked like NGD has come down so hard, and not a bad company. You know, they do a lot of things right, but it's come down really hard. And back in a year ago, it was trading up above $4, and as we speak, it's 88 cents. But by my own technical methods, 94 cents looked like a good place to step in and buy, but I decided to step aside and let the thing fall to around 52 cents before I jump in on it. And again, this is a real company with real reserves, proven reserves. They've got properties in Mexico and here and there, and it's a going concern, and yet there seems to be no bottom on the stock. So more even than bullion itself, the mining stocks look awful because they're just they're money pits. You know, gold is being treated as garbage right now, and so you can imagine how you treat companies who spend enormous sums to get that garbage out of the ground.
Is it the same for silver producers?
It is, and you know, silver has had the benefit. You know, when you're mining silver, you can sell in the processing of silver. You've got copper and zinc and some other things, but you know, the value for those other things has taken quite a hit too. So silver producers who were marginally profitable, or you know, just managed to pay expenses by you know, divvying up all the things they get out of the ground to produce a silver ingot, they're in worse shape too. You're going to get a good leverage play in silver if and when bullion ever turns around. I say if. It will eventually, but I'm just hoping in our lifetime. So silver, you know, you get a nice pop, and First Majestic in particular is a great way to play it, but I don't think I would even try it again till the stock gets down to $4.57, currently trading $5.33.
We'll have more with Rick Ackerman right after this.
I'm Brian Fowler, president of Blind Creek Resources Limited, listed on the TSX Venture Exchange, ticker symbol BCK. Blind Creek is focused in the Yukon, Northwest Territories, and British Columbia. The company's key property is the Blend Project, one of the largest undeveloped lead-zinc-silver deposits in Western Canada, plus plans to advance the recently acquired, fully permitted historic engineer gold mine in the Atlan District of northwestern BC. Check us out at blindcreekresources.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Rick Ackerman. Rick, do you have any plays on crude oil right now?
My subscribers are always looking for it, and crude has just worn me out. It can take so long to do the logical thing, and the picture in crude, if you try to kind of get it down to reasons, like why, if you're examining the market for crude and suppliers who may have cut back and a decrease in demand at the margin from such big users as China, it's hard to get the silver, the crude story right. There are just too many variables. So I tend to look at silver more than anything else that I watch from a purely technical standpoint. And you know, I was pretty bullish. I thought it would go into the low 80s back in May, but it didn't. Instead, it's kind of had these wide swings from low 70s down to low 60s. And we're still in that range, and it certainly looks on the daily chart like a consolidation. Everything we've been doing since May. And if you take this kind of sideways chop, and it's more than chop. These are big seismic moves. I could see crude basis the December contract somewhere up in the mid 70s, currently trading. The September contract 67.35. Let me take a look one second at the December. December contract is at $68.39, and I think we could be looking at around $73. Let me just double check that. Yeah, $73 if crude takes wing here.
Taking a look at U.S. Treasuries, I think the yield curve here is starting to flatten out. 2-year U.S. Treasuries at 264, 10-year at 289. Is that a concern?
I had a forecast of 3.11% on the 10-year note that goes back to December of 2016. That wound up as being an exact dead center bullseye. But I think rates are going higher, and it's hard for me to kind of choke that out because I am a deflationist at heart, and I see, any really serious increase in interest rates as being somewhat self-canceling, because if they're going up because of whatever perceptions, it might be business is picking up in China or global business is picking up, or we're just having inflation, whatever that means. Once you get above, let's say, 3.25 on the 10-year note, you're reaching a threshold where the rise in rates itself is going to be inhibiting of economic growth. So I can only go so far. I can only be moderately bullish on rates, bearish on T-note and T-bond prices. But yeah, I think we're going to get somewhat higher rates, but I'm not really fervent in my belief there, because I just think the economy, for all the talk about 4% GDP and this and that, I think we're just we're floating on air here.
Are you surprised that small and medium-sized businesses say they can't find people to work for them, yet at the same time wages aren't going up?
Well, they are if you live in certain cities like Portland, that thinks every minimum wage earner should be able to support a family of 4. But, the employers are becoming, let's say, overly sensitive to the labor component, so that now even it's like they're about to do away with that one person that supervises the self-checkout lines in the grocery store. So you've got to kick and pound the machine to get it to work, and there's nobody even to help you out. So it feels like the last vestige, the last few people who were out there on the showroom floor or at the checkout counters, they're disappearing too. So that's what happens when you mandate an increase in the minimum wage. You destroy minimum wage jobs. Employers will find a way, and if you can run an entire McDonald's with just one person in there, doing the takeout window and the cooking and the you don't. We're getting away from cash registers now, where wherever we're paying for something, we punch it in on some, on a tablet or something like that. So we're not even going to see checkout clerks and cashiers anymore.
Well, that's on the premise that everybody's going to be honest, isn't it?
Well, I've never tried to make a run for it with a free cart of groceries, but I think that part of it, that was probably the first piece of robotic checkout that they put into place, and that was avoidance of getting ripped off by people who want to make a dash with a full shopping cart. So I'm assuming that when we go through when we go out the door with a lot of things that we haven't paid for, that all sorts of alarms go off, and then the one person that they haven't replaced with a robot yet, the security guard, will nail you.
Well, but I'm just saying, are you punching in the right price item? I mean, you may have 10 items there, but are you putting in the right inputs to pay the right price?
I would guess, since it's purely a digital function, that they know that too. They know that if you, let's say, have a bag full of pinoles, which I think are maybe $32 a pound, the shelled nut, and you've coded it as walnuts or something, I got a feeling they know what's going on. Or on the other hand, if they don't, if for some reason you should get caught with the pinoles that you paid $6 a pound for that should have been priced at $32, it's sort of like getting caught at a poker game with a holdout device up your sleeve. You know, there's no story you can tell that will be exculpatory.
Well, I just punched in the wrong code. Rick, is there any overall thing to as NAFTA negotiations resume today that both sides should be looking at? We had the president saying he didn't think that it was politically necessary for Canada to be included in the North American trade agreement, but is it? And would it be in an agreement without it?
Well, I'm really astounded that the stock market continues to just ignore things that are going on with the tariff war. China obviously hasn't blinked, and it's dangerous at this point. I think that today or tomorrow, any day now, we were actually going to implement much higher tariffs on a broad range of Chinese goods, and no sooner do we get this the news that maybe Europe is starting to play ball, then Trump says something that kind of pushes them away. So this is really high-stakes poker. And again, the market acts like everything's going to be hunky-dory, but there's so much picking and choosing in what Trump is doing that you have to wonder whether it's all going to turn out so well.
Rick, thank you so much for chatting with us.
Always a pleasure, Jim. Thanks for inviting me.
My guest has been Rick Ackerman, editor of the newsletter Rick's Picks, his website, rickackerman.com. If you have any questions for Rick or any other guests, you can send them to info@howstreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.